Good morning, class. You are welcome back to Islamic College Osogbo. On the topic we are into, balance sheets. As we have said, that balance sheet is under final accounts, and we've treated trading account, profit and loss account, and we are into balance sheet now. Balance sheet, as has been said, that is a financial statement, a statement of account that shows the financial position of every business. That was our discussion. Mind you, my students, whenever you are into accounts, always remember the principle that guides the preparation of every account, that for every debit entry there must be a corresponding credit entry. That's the main beginning of the accounting activities. So, getting to final account, we discuss trading account, profit and loss account, and balance sheet. We are on balance sheet now. The essay to balance sheet has been treated, that balance sheet, a financial statement that shows the financial position of every account at the end of every year. It's a balance sheet. And we discussed the usage or the purpose of balance sheets. That balance sheet is used to determine the fixed assets, to determine the current asset, to determine the liabilities and assets of every business. That's a balance sheet. Mind you, we are told that we have two sides in preparing account, two headings: asset side and liability side. Under asset side, we have fixed asset and we have current asset. Under liability, we have current liability and long-term liabilities. These are some other things was our discussions last week. Today, we are moving on to the examples and calculation or workings on balance sheets. The working now shows, example, you are required to prepare a balance sheet as at 31st December 2017 using vertical method of preparation from the following information below. Capital, 9,800. Net profit for the year, 2,580. Drawing, 1,400. Creditor, 2,340. 340 naira. Debtor, 2,670 naira. Bank loan, 10% on bank loans, 2,700 naira. Plant and machinery, 4,000 naira. Stock at end, 2,545 naira. Premises, 5,000. Cash at hand, 305 naira. Cash at bank, 1,540 naira. And you are required to prepare a balance sheet as at 31st December 2017. And you have to use the vertical method of preparation. So now, balance sheets at 31st December 2017 as follows. Fixed assets. Fixed assets. Fixed assets. Fixed assets, as I've said. Fixed assets. Fixed assets. Under fixed assets, you are told that these are assets that are not easily convertible into cash or into money, but have a long-time usage. That's fixed assets. And these fixed assets are plant and machinery, which is 4,000 naira. Premises, which is 5,000 naira. Total of fixed assets is 9,000 naira. Current assets. You are told that current assets, these are economic resources of a balance sheet or of a business that are easily changed or converted into cash or money. It has well known as circulating or floating assets that go around the businesses at the end of every year. And under fixed assets, under current assets, we have debtors, which is 2,000. The total fixed assets we have is 9,000 naira. Current assets, debtors 2,670. Stock 2,545. Cash at hand 305 naira. Cash at bank 1,540 naira. We had everything together. We have our total current assets. Addition of all this together give the total of 7,020 naira. From this current assets, we now put heading, under heading, which is current liability. Now less current liability. Less current liability from it. And the current liability, only current liability we have is creditor, which is short-term liability, which is creditor. Less, mind you, like we are told that the sign of bracket open and close in any given figure indicates minus. When we subtract 2,340 naira from 7,020 naira, it gives total amount of 4,680 naira. That 4,680 naira will serve as our working capital. That 4,680 naira will serve as our working capital. We now add up working capital with total fixed assets. Addition of current working capital to fixed assets will now give us the total of capital employed. So 4,680 plus 9,000 give us 13,680 naira. That's our total employed. That's our total employed. That's our capital employed. Sorry, capital employed. 13,680 naira is our capital employed. Sorry. To move forward, under heading now write financed by capital. It is the capital that we use to finance it, financed by capital. And our capital is 9,800 naira. 9,800 naira. The net profit from the profit and loss account, the net profit we realize from profit and loss account, the gain we made, we now add it to that capital. By adding it to the capital, it gives total amount of 12,380 naira. 12,380 naira. And the drawings, like we are told, drawing may be a personal drawing, but when you are withdrawing for business use, it always go in line with bank and cash. But when you withdraw any amount for personal use, we call it drawings. That drawings, you now deduct it from addition of net profit and capital. The signs of bracket open and close in that drawings shows that you are asked to deduct drawing from the actual amount of net profit and capital. By deduction of 1,400 naira from 12,380 naira gives 10,980 naira. 10,980 naira. Move on to long-term liabilities now. Long-term liabilities. All the items in this question given were touched. It has to be touched and treated. Long-term liability now. Under long-term liability, we are given only bank loan. There's nothing like debenture. There's nothing like debenture. There's nothing like accrued. There's nothing like a bank overdraft. But we are given bank loan. 10% on bank loan. It has been charged already. When after charging, the less amount is 2,700 naira. You now add that 2,700 naira to 10,980 naira. When we add it together, our total will be 13,680 naira. So go back to what we have treated, what we have discussed so far, that our capital employed is 30,680 naira. By now you see that the business that is being financed by the capital and the net profit, less minus the drawing plus long-term liability, also equal to 13,680 naira. 13,680 naira. My dear students, please always concentrate on this and make sure you get it very clearly. These things are very simple. Once the primary basis of account is being taught and understood, you'll be able to tackle all questions given to us in any accounting preparation. So you can see in this question, there's nothing like depreciation, there's nothing like accrued, there's nothing like prepaid, whatever. All these things, unless you are being given, you are not expected to charge it yourself. When you are given a question, then you consider it to be treated. But now, it was not given. And you also use the vertical method of preparation in balance sheets. So, on this note, this is where we are going to draw the curtain of today's lecture. But before we go, my students, always read all your books. And then assignment to this will be given to you. This is the assignment. The question to the assignment says, use the information below to prepare trading account. You know, we've treated trading accounts, Abi, to prepare profit and loss account, and it has been treated, and balance sheet, in which we are into now. Balance sheet. As at December 31, 2018, use the traditional presentation or T format to prepare it. You have to use the T format. So, this is how it is given. Stock at close is 6,498 naira. Sales 35,134 naira. Purchases 22,760 naira. Salary 4,300 naira. Motor expenses 1,040 naira. Rent and rate 1,340 naira. Insurance 222 naira. General expenses 210 naira. Premises 3,000 naira. Motor vehicles 3,400 naira. Debtors 3,900 naira. Creditors 3,076 naira. Cash at bank 3,308 naira. Cash in hand 80 naira. Capital 10,848 naira. When you add everything together, you see both sides are equal. That means the trial balance to this question given is equal. The trial balance is balanced up. So you now use this question to prepare your trading accounts. And in this question given, the items for trading account are just maybe 2 or 3. My student, do not mind yourself, do not disturb yourself that opening stock were not given. Do not disturb yourself on that. Just go straight to purchases. You use your purchase to start your trading account. Sales, those are items in trading accounts, like we have done it so far, like what we have done in the past when we started. Sales, purchases, stock at close. Those are items of trading accounts. And items for profit and loss account. In your preparation of trading account, if you're at the end of the final preparation, you are able to get gross profits. You now take that gross profit, you take it to the credit side of profit and loss account. You add it to any income that is being given, like maybe discount receipt if it is given, rent receipt if it is given, commission receipt if it is given. But if those things were not given, just move down to the left hand side for the expenses. The expenses are salaries, motor expenses, rent and rate, insurance, general expenses. General expenses. All these are expenses that is being affected by that have been affected by the profit and loss account, you are asked to prepare. At the end of the preparation of profit and loss account, if at the end of the whole exercise your income is greater than the expenditure, that means you are going to have your net profit. Net profit. It is that net profit that you are going to add into the capital in the balance sheet. You can see 2/3 of the assignment given is being explained. Mind you, if it is net loss, it's either you subtract the net loss from the capital or you take the net loss to the current assets. Get that one right. This is the question for the assignment, and part of that question has been explained. My dear students, please read your books. Do not play away your time. Do not play away your time. Time waits for nobody. And then, as you can see, time is an asset. If you don't use it wisely, it's a problem. One is bound to fail if the plan is not okay. You have to plan your time very well. Time is an asset. You have to plan it well. Make use of it judiciously. May Almighty Allah increase the wealth of our understanding. And let this lecture be part and parcel of you. And may Allah make it be in your memory. And make every one of us have a retentive memory in order to excel in our study. Subhanaka rabbil izzati yasifuna wa salamun al mursalin alhamdulillahi rabbil alamin. Thank you, my students.